Good morning, everyone. I'm your host, Ryan Rozbiani, and welcome back to Market Simplified on the Place Your Trades Network. We're the network that focuses on trading daily options using CME Group's event-based contracts to trade indexes, metals, energies, and Bitcoin futures markets. Today's broadcast is brought to you by Tradeovate, which has built the custom app dedicated to trading event contracts, which is what we use here at Place Your Trades. What's going on, everyone? Welcome back to a brand new episode, brand new show. It has been a crazy market for the past few days. Ever since that CPI came out last week, we talked about it. Ever since that chaos happened, we've been seeing the market sell off essentially. And it's been a pretty ugly reaction. So let's actually take a look at what's been going on SPY. We're going to start it a little bit interesting today. We're going to shorter one, but we're going to make it interesting. You can see here that right off the bat, this thing has just been going. It's just been falling. It hasn't been pretty one bit, but the action has been interesting for traders. We can see here you've got a bit of a falling wedge action trying to form, I guess, but it just hasn't had the juice yet to break out. And even if it tries to break out, it's kind of got this second layer of defense right on top of it that could stop it. So it's been a bit of a wild one. This morning, though, we had the jobless claims numbers come out. Essentially in line, 1,000 better than forecasted, better than previous. Markets didn't really care. I don't think markets are reacting to this at all. Continued jobless claims was a little higher than forecasted, more than last time. So more jobless claims came in. But I think eyes are really on the bonds market. If we take a look here, the 10-year is way over 4%. Way over 4%, and that's usually a bad sign. We're at 4 or higher. The tech markets really hate this thing. They really hate when this thing goes higher, and it kind of causes a lot of mayhem inside of that. I want to show you the overall U.S. bonds market too, because I think that there's a lot happening. There's a lot happening in the bonds market. So this is the 10-year. Take a look at this. It's over 4%. It's been on a massive meteoric rise for a while now. It's got its cool off periods, but essentially it has been picking up and going crazy. And now let's take a look at the 2-year, a little bit shorter term. This one's been, I guess, a little calmer, but it's still been like that 5% area is where this thing kind of like causes a lot of heartburn and pain for the stock market. So it's been an interesting one there with these bonds. These bonds have been really what's moving the market. But essentially this week, there wasn't really much happening. If we take a look at it, right, on Tuesday, you had the core retail sales data. It was good, but markets still sold off. They were not happy with the inflation expectations. It's in the air that inflation's picking up again. We've been talking about it on this show for a while now with looking at energy prices, food prices, many other things. It's been in the air. It's kind of lifting up and moving. So tomorrow, which is Friday, TGIF, there isn't really much happening in terms of that. I'm just checking to I want to check to see the earnings calendar, and nothing happening today. You have Applied Metals in the afternoon, Bill.com, and Ross, the dress for less. But then tomorrow morning, I guess tonight, you have XPEV from China coming out, their EV. That'll be interesting. Tomorrow morning, you have John Deere and then Estée Lauder. For anyone who wants to, who follows those companies, I just wanted to quickly inject that there. But taking a look at next week, so going into next week, I want to focus on this. I have China and the U.S. stuff loaded up. Monday, nothing. Tuesday, nothing really. You have a few Fed speakers happening, but really they haven't been really moving markets much. Markets got exhausted. They did too much talking. Now markets don't really care anymore. They'll listen, but they don't really care anymore. They don't really react like they used to do when Fed Bullard would get on that stand and just start waving his finger in the air and markets would freak out. That's not happening like it used to anymore. But we have some MBA price index, again, stuff that doesn't really matter too much. You have some housing data, nothing too crazy. But then this is the thing. This is the big kahuna, Jackson Hole Symposium, August 24th. Oh, how fast the summer has flown by, ladies and gentlemen. Jackson Hole Symposium is the thing that set off last year's chaos. So if we take a look at this, I want to show you exactly on the chart what I mean by this. So Jackson Hole last year was August 25th. I'm sorry. Jackson Hole last year, let me just load it up. Jackson Hole last year was August 27th. Excuse me. It's a several day event. So on the 27th was the very last day. It started on the 25th, ended on the 27th. So I'm just going to turn off everything for a second, 25th to 27th of 2022, because I want you guys to see the chaos that ensued thanks to this event. It's actually very funny, because that is when a lot of chaos kind of started happening. So the August 27th, I said, let's take a look at this. So 25th, 26th, 27th, we can see we had a massive flush into that area, and essentially he destroyed the markets. Jerome Powell was very hawkish. He was talking about how much of a stance he's going to be taking on the market, and people are watching to see next week, is Jackson Hole Symposium going to be what comes in and closes these gaps that we've been watching on the chart? Can it bring us down to 422? We'll have to see. We'll have to see how a lot of that stuff plays out, but these are essentially some of the levels that I've got right here on two sets of Fibonacci's that I've drawn. It's kind of like a term for here, and then I have a newer one that I'm kind of like playing with. I need to see how things play out. I really like this set of fibs that I have here. That's why I haven't really like nuked them yet. I haven't taken them out. So taking a look at the market overview, we discussed that. Let's take a look at some price action that's happening today. So let's take a look at Tesla. Let's see what Tesla's doing. She has fallen. They closed this big gap. This was the gap up, not from earnings, believe it or not, but from the Charging Station Network news. This gap has now filled. There's an older gap down here. I think that has finally filled as well. Let me just double check. Let's drop some lines. Yep, it has filled now. It has wicked out. It has filled now. These gaps have now filled. We don't have anything visible within range for a while. So all these gaps, I mean, look, if you wanted to, hopefully we don't come down here. You have a little bit of a gap here at the 140 range, but I'm hoping we don't come down here and test it. But everything else has been filled, which I'm very happy to see. Very happy to see Tesla finally filled that gap. But that means I'm going to have to now go back and chart or find some old charting data for what was going on there so I can share with the team. So that's going to be very important for me. It's going to be a lot of work there. So let's take a look at Apple. Apple has been a pain. I'll be honest with you guys. Apple has been a pain. It's been selling off. It's been kind of in this bloody movement. I really hate how it's been kind of moving. It's unfortunate. It's really unfortunate how Apple has been moving, because it's just been a bloodbath off of earnings, the earnings that we had known about. I think that's what confuses me and a lot of people, is like, hey, Apple told us that this was going to happen. Apple told us that a lot of this chaos was going to ensue. Apple told us that sales would be lighter, but people didn't listen. People didn't believe it, didn't want to believe it, didn't want to be open to the idea that this could happen. But hey, it's happening. Apple came in, it filled that gap. It's finally filled as well. This is the gap that I'm talking about, is from here to here, 175.77 to 176.57. That gap is finally filled, and now it's kicked into gear a little bit even lower, testing this fib level down here. So Apple's $3 trillion market cap is it's been sayonara for a bit now. It's been kind of just like flying and hanging in the wind. It's unfortunate, but what are you going to do? It's going to happen. Eventually, we'll hopefully come back and fill this gap up here. This is an opportunity, in my opinion, for long-term investors who believe this is like towards the bottom end of the market, or a good place to add, whatever they think. This is this kind of this drop is really for them. I want to take a look at Target. I know they had earnings yesterday. They gapped up on earnings yesterday, but it looks like they've kind of mellowed out a little bit there. So let's go to something like an hourly chart to see. So they gapped up on the earnings yesterday, and now they've kind of sold off a little bit, got a little bit of a pop again this morning, and now it looks like it might be getting a similar style situation here for Target, which has been dealing heavily with theft. That's been a big problem for Target that they brought up. I'm just looking at the chart. There wasn't really many exciting earnings this week. I'll be fully transparent with you guys. Like, most weeks have been like really cool, really exciting. Okay, this company, that company. But I think all the exciting ones are gone, and we're just waiting for NVIDIA. I think for NVIDIA is who we're waiting for. We need NVIDIA to get in here, give us those earnings, raise that guidance, revive the market like it did last time. But I think that, I don't know, this time is it different? Is it over? Is the party done? Because all eyes, look, if anything goes wrong with that earnings, all eyes are on the earnings gap from here. And we can see here that the earnings are set to be on the 23rd. So they are next week. Let me just double check NVIDIA earnings. If they're next week, then things are going to get very, very interesting. Yeah, August 23rd, scheduled for August 23rd. That's next week. It's going to get very interesting. In my opinion, if things go bad, this gap fills very fast. Now, it might not fill at the right, like flash fill this $60 right here, but you will probably start to see a descent into this gap and start to fill it the way that we're seeing right now on Amazon, which I've been watching very closely, and it's been doing it, right? Look, we had a gap, we gapped up, and it couldn't hold. It was very top heavy. It was like they literally said, I'm not joking, on the earnings call, we have AI in everything. And then we were on like a Twitter space. Someone's like, they even have AI in their toilet paper, and that gave us like a really good laugh. So let's move on to event-based contracts. Because I want to talk to you guys about Tradeovate. Tradeovate is one of my favorite tools recently. It allows you to trade event-based contracts for the S&P 500, NASDAQ, Dow Jones Industrial, Sweet Crude Oil, Gold, Russell 2000, Euro US, Henry's, Hub, Natural Gas, Silver, Copper, and even for our crypto friends, Bitcoin. So these contracts, how they work is you click on the strike. There are 0 data expiration contracts. That means they expire at the end of the trading day. And then you're saying, and you're buying, and you're guessing, essentially, you're putting your trade, you're placing your trade as to if we will close over a certain level or if we will not close over a certain level. These event contracts are exactly the price that you see on the screen. It's not like options that have a 100x multiple. No. These are the prices that you see on your screen. So if it says 50 cents, it's 50 cents. If it says 1975, it's 1975. And let's pull up ES so I can walk you guys through exactly what's going on. So ES right now, let's turn everything off, is at 4418. So 4418, we're all the way down here. We're right here. We're in between these two. As you can see, the options pricing gets a lot tighter here. So what you do is you can buy if we're going to close above, or you're going to buy no, we're not going to close above. So let's take a look. Now, this is where the analysis kicks in. This is where the chart leads the way. And take a look at this. I posted this for my team as well. Rising wedge played out very, very well, almost to the T. I need to take a screenshot of this for later. I think that this is going to be this is a fun one for me. And it's kind of it played out. So this is again the beauty of charts, and we're sitting here at the 44.17. And now the low of the day was held, right? The low of the day was very parallel to a low that we hit yesterday towards the end of the day, and we closed above that. And I'm thinking, let me see. Well, the day is still young. There's a lot of chaos still in the air. I'm going to go on the no side of things this time. I'm going to say, where's 44.20? I'm going to probably, let me see. Let me just kind of get my wits about me. See where we go. So if we go close here, even this whole time it goes to the 20 MA rejects, comes down. So where's the 20 MA sitting at? 44.22. Let's just say 44.20. So I'm really inclined to go with these no contracts here, where the 44.20 is a no, where it says 44.20 is a no. We do not close above 44.20. So you'd click this, you'd buy these contracts, and then at the end of the day, if you're correct, they would be at $20. And anytime during the day, you have the ability to kind of cash out those shares, quote unquote shares, your contracts. Actually, they're called contracts. Cash out those contracts. Oh, look at that. We're up 50 cents on the position already. Surprise, surprise. And you can take profits at any time if you're winning, or cut your losses at any time that you're losing. So the markets have been very, very interesting. It's been a wild roller coaster ride. Next week's Jackson Hole Symposium is going to set the tone for the next month or so or more. It's going to be the first time we hear from JPOW since FOMC. I'm very excited for it. I know a lot of people are very excited for it. And I think the cool thing is it's happening on a Thursday. So it's happening on a Thursday morning. It's starting. I don't know if Jerome Powell will be speaking that Thursday. Actually, let's take a look at his calendar. We can actually really quickly close the show to see if this is where JPOW, what day JPOW will be on live, and we'll close the show on that one. So, It hasn't been posted yet to his calendar. I'll take a look. I'll do a deeper dive on it, and I'll post something on it. So, guys, I want to thank you all for being here. I know we had a bit of a shorter show. We discussed everything we needed to. We went over our contracts. We went over our charts. We went over everything. We hit all the stuff. The charts are playing out. Everything is there. I want to thank you guys all for being here. Make sure you subscribe, like, and share this video if you haven't already. We assume you already did. Go to tradeovate.com, sign up. Go to Place Your Trades. There's a ton of very, very, very valuable stuff there for anyone who's interested in getting all that stuff, especially that morning newsletter. It's fantastic. I highly, highly recommend you check that out. All right, guys. Thank you so much. I'll talk to you guys next week. Have a good one. Bye-bye.